Well, rentals are completely dead in 2025. This isn't just happening in Miami or Austin anymore. If you own rentals in safe cities, you better pay attention because the math just stopped working. So I'm going to go over a real life example of why it makes no sense to buy a rental property or even to own a rental property over the last 2 to 3 years, and especially in 2025. So let's dig into a rental property that I recently sold. We'll blur out the address just for this information. I sold this property for $400,000. So let's dig in. It rents for $2,235 a month. Okay, here's the house. Looks good, right? We put a new roof on it. It's got a nice lake view. It's got a lanai, stucco siding. Pretty nice house, right? But doesn't have upgraded kitchen, popcorn ceiling, doesn't have upgraded bathrooms or anything like that. Just a very basic house, 1,565 square feet. And we bought it for $190. That's what the data shows us. And so we made a really nice killing on this property. But the reality is, does it make sense to purchase in today's market? Absolutely not. So let's go ahead and jump in, and I will show you my rental analysis of why it makes sense for this property, doesn't make sense to purchase this property, and doesn't make sense to purchase any rental property. And it's coming for every single city. The numbers just don't make sense. So let's jump into the numbers and see why that is. And this video could probably save you tens of thousands of dollars if you move quickly enough before the market hits you. So let's jump in here. So let's go in and dig into this amortization model. So I'll just show you what it looked like when I purchased it. So we had a 4.75% rate. We bought it for $190. Okay. This was back in the day, and it rented for about $2,200 a month. It went from $1,900 a month up to $2,200 a month. So you could see our cash flow. We put about $50,000 down to purchase it. It is actually less than that. We had an 80% LTV. So we put in total acquisition costs was about $40,000. It would cash flow us about $5,000 per year, giving us about a 13.92% return on cash. Obviously, we had a principal pay down. We had depreciation, tax depreciation, depreciated at 27.5 per year. And then we also had appreciation that we had into the property. So our total return was pretty solid every single year for the amount of acquisition costs that we put into it. And this completely made sense. I also didn't have property management. I managed it myself. So the returns were even higher. So you could see the returns there and the total return over the 30 years. It was a great purchase, great timing. The numbers made financial sense. Now today, if you were to buy the same house as an investment property, you would be looking around the sevens, possibly higher. It depends on how much you put down in your lender. And let's see, the price of the house is now instead, it's $400,000. Okay, so you'd be putting $86,000 down. The new rent amount is $2,235. So your cash flow purchasing this house, you're losing $10,000 a year in cash flow. That's not including all the other things that possibly could go wrong with your house. This also assumes a 5% vacancy. And it does not include any sort of, it includes a little bit of price appreciation, but not much, about $3,600 price appreciation. Obviously, we expect prices to come down 30 to 40%. I'll show you why in this model by the end of the video. But this information is absolutely dire. So if you need to underwrite your property, you need to figure out whether it makes sense to buy a investment property or even to sell your investment property. We did the math and we found out that our return on investment was less than 3% on our entire rental portfolio. So we went ahead and we said, let's sell everything, and we turned it into private lending money. We were making 15, 18%. So we're trading 3%, and you have to manage it, right? These things don't manage themselves. There's things that go wrong. And instead turn into something more passive and 5x our return overnight. So let's see what this looks like. So you're going to be losing this amount of money. So you're underwater per month. I mean, what, $800, $860 a month by purchasing it today. So what does it have to sell for it to make sense? For us, for a rental property to make sense, you need at least $300 a month cash flow. And that's above everything, including the repair escrow, which we put here. So just going over some of the assumptions. Here's our formula for the taxes. Here's our formula for the insurance, which is pretty accurate if you actually look at it. And then we assume 7.5% repair escrow, and altogether our total cost of holding the property is $2,800 per month, roughly. And we're looking for $300 a month cash flow. So let's figure out what would get us that $300. What would the price of this same property today have to be able to get the same price? So let's look at it. Let's see if it drops to $350. Let's see if we do $350. No, we're still down $530. Let's go to 300,000. No, we're down $200 a month. Let's go to 250. 250, okay, we're getting closer, 128. And then let's go to 200. Okay, so 200 is a little bit too high, so let's go to 225. 225. So it would have to drop from $400,000 to $225,000 for this property to make sense as a rental. That doesn't include, hey, you're probably going to have to upgrade the windows are pretty old. The HVAC I know is old. All these other parts of the property, it's pretty significant. So it would have to drop $175,000, which is a 56% drop, 40 in price from today. That's insane. Now I do the math on some of the other properties and it comes between 30 and 45% drop for it to make sense to purchase property. This is why you see the wholesalers going out of business. This is why you see the flippers going out of business. And you don't see anybody doing BRRRRs anymore. The buy, renovate, refinance, and repeat type of process where you can get your money back out. It's not possible because who is selling one of these houses for 50 cents on the dollar, which really you would need to buy even less than that. And that's if you can get the 7% rate. Obviously, if the rates go up from here, it makes the situation a lot worse. So ultimately, this is not a really good deal. I'm buying at today's prices. Prices do need to come down 40 to 45%. And here's all the math behind it. It's just an amortization table. What are you seeing in your market? Are you seeing rentals make sense? Are you following this similar model with $300 a month cash flow? That was our gold standard from 2014 when we started buying real estate all the way up until 2022. And a lot of people say, John, you're so bearish on the outlook of the real estate market. I've been bullish on the market from 2014 all the way to 2022. When the Fed in March 2022 started raising rates, I knew that these prices would come down and that the game would be over. And there's always a delay of 8 to 9 months. We started seeing weakness. We sold everything, including the property I showed you before in 2023, and we unloaded our entire portfolio before the middle of 2024. We're very happy that we did. And since then, prices in Jacksonville specifically have already come down 10 to 15% depending on the neighborhood from the peak. And we expect, and that, by the way, is technically a correction. A crash is 20%. So we're expecting to see a crash. We expect to see prices come down more than 20% from the peak. And this is simply a function of the interest rates are too high. We're in an affordability crisis. If you're in an affordability crisis in your area, drop below. What are you seeing on the ground here? Now, I know the Northeast is still staying strong, but the Southeast is rough. Texas is getting hit, and we'll be coming out with more data around that. If you want this and more information, go ahead and subscribe to my Substack. I release data there that I don't release here, and you'll be on the lookout for a lot more charts and data to show why real estate is a really tough spot to be in. And if you need to analyze your property today and you want a spreadsheet like this, feel free to reach out to me. I'll send it to you as a free gift. My email's in the information below, and drop a comment and a like. Thank you guys for watching today.